Stock market crash, crypto crash, meme crash. Let's go through these things and see what's going on. Of course, like Jay Powell is talking about tightening. Now he's like, whatever, I'm fine with a recession, no big deal. Yeah. Anyway, this is not a whole video on Bitcoin, but it's breaking 40 right now, which is a huge deal. Like that could crash faster than I thought. Go take a look at my Satoshi Craig Wright playlists. I can explain the whole Black Swan. I'm not doing it this video, but this definitely matters for the general market. Please like, comment, share, subscribe, all that stuff. And let's do the interest rates first, and then we'll go through the market and see what's going on, because I think there's a lot of stuff getting in trouble that I didn't think was going to be in trouble this fast. Okay, Treasury bonds, TLT. This is the 20-year U.S. Treasuries, and this is not broken down yet. I hear everybody saying that this is broken down, and it's all like screaming high interest rates from here, and it straight hasn't done that. Like, this is a breakout that is still on the breakout side of the breakout. So we're just going sideways, and we're on top of the downtrend line here on the U.S. Treasuries. So I don't have a call here. We'll just see what it does. But let's take a look at the euro dollar trading, because this is the international bond trading, which is also important to look at for interest rates. So if interest rates go across here, I mean, that'll put interest rates not that high. I mean, 2 or something. If it breaks out of here, that's high interest rate scenario. We're nowhere close to that. Like, we're just barely turning over on the international bond trading. So the interest rates don't look too crazy yet, and it does look like it's rolling over. But let me go back here to the last time it started rolling over like this and show you if it will load. Yeah, look, like the last time it rolled over, it froze and went right back to zero interest rates. I mean, that was the whole long-term zero interest rate thing that we had. But just the general pattern here, it's consolidating toward low interest rates, and that could run out 10 more years. The high interest rate whole philosophy or whole story that everyone believes is happening is not confirmed on any chart, although it does look like we're making a little move to higher interest rates in the short term. But let's go look at the general market and see if the S&P is actually scary, because I heard some people freaking out about it, and it is actually breaking through some levels. All right, so the S&P is breaking down, and I would imagine this is going to continue to the mid-channel point. And yeah, I mean, you can see the downtrend here, so I would expect some reactions around here. There's a good chance of a back test under here, but we're inside of this channel now, and it's our bubble. The whole green bubble channel is holding us up now. So something like this. I don't think we're probably going to back check here. I bet we come down, but this is going to be big time support. That's whatever, April, May, around 4,000 or something. Like, it's going to be hard to get through that level if it pulls back. And the S&P is tricky because it's like, even when things are selling off, whatever they're rotating into is part of the S&P too. So it's hard for the whole market to pull back, but we'll see what kind of action we get on the S&P. That is definitely a bearish look. This is the one that I wanted to see. The NASDAQ is falling out of the channel. This is a huge deal. So, I mean, the last time we fell out of the channel was what, like Volmageddon kind of stuff? Yeah, this is like Volmageddon on the NASDAQ. And we had the 2018 crash here, where we came out of the channel. And this is the COVID crash here. So the NASDAQ falling out of the channel can do some super ugly stuff. We got back in this channel and held it for a while here, but this is extremely dangerous. And even if we rally we could end up with a back check that sends us into a big down move on growth stocks. So this is a really scary move on the NASDAQ, although I don't think it's going to result in a short-term like collapse here. I think it's more likely that we get like volatility, and a crash would probably come later if we get stuck under here on the channel. But that is pretty ugly. It's sooner than I thought it would come down, and it's uglier than I thought. So it actually is looking pretty bad. This is obviously terrible. So the IWMs is the small caps, and like the zombie companies, the meme stocks, like it's a good representation of general like margin loan in the market as well. Like how much newly printed money is going into like super high risk stuff. And right now, it looks like money's coming out of all of these things. And so that's just like a general risk for the market. But it's going to hit the small high risk stocks that don't have profit margins and stuff like that first. And we've already been seeing that. I mean, there's a lot of smaller companies that have been coming down, but just to see it on the index like this, I mean, you can see the downtrend here. So I think we're in a crash that's going to pull us back, I don't know, 10 to 20%. Like I think we're going to get a legitimate pullback here. And I'm trying to figure out what's coming down and what's holding. So it definitely looks like the small high risk stuff is looking bad. And then here's a good chart on the NASDAQ versus the S&P. This is the ratio of the NAS versus the S&P. And if this thing comes back down, like it was at all-time high ratio, if this ratio is able to break underneath and start heading down, that would be really, really bad for the growth stocks. And so that's an interesting ratio to watch, but it hasn't broken down yet. It's just pulling back a little. And then, yeah, we did treasuries. The dollar, probably bulling. It's always bulling. Yeah, okay, so the dollar completely held on the bull, like the bubble trend line, and now it's back up into the higher channel. Okay, so this is a setup for the dollar to make a bubble move, and that's going to put pressure on stocks and crypto. Yeah, so this is every single chart is lining up bearish right now, and gold is breaking out. So this is an interesting one where that would probably be bad for Bitcoin, and in a real crash, gold will crash with the markets. Like if you're getting margin calls, people have to sell their gold to cover margin, and gold will crash with a real crash. So if you see gold breaking out during a crash, it's not a real crash. That's a rotation of things. And that's what we're seeing now, is a rotation of things. So what's rotating out and what's rotating in? At the moment, it looks like the super small high-risk stocks are rotating out, and people are coming into safer assets. And oh, silver went all the way. Oh, this is really interesting. Okay, if silver holds this, silver's trying to decide if it's in the low channel or the high one. Silver was threatening to break down. Now it looks like it wants to pick this up and actually bull. So if silver is bulling, that is a look for like safety and commodities versus risk stocks. And that looks like the rotation that is happening now. We took a look at BTC. It's scary. I'll skip all of that. So let's take a look at some risky stuff. Like Tesla. It's like king risk stock, but now it's a big one. My big complicated Tesla ribbon here. So Tesla's still trapped. It hasn't come down yet. But if we flip through like a bunch of other smaller EV, lithium kind of stocks, like they are all dumping. ARK is a leveraged fund on a bunch of that stuff, so like it can make bigger moves on the upside than the underlying, can make bigger moves on the downside than the underlying. So ARK is in big trouble right now. And then we have a ton of these little ones that are breaking down. Workhorse breaking down, GoEV breaking down. There's like support areas where the bull structures are getting broken on a bunch of these. Nikola, I've been short and it hasn't broken down, and now it's ripping down. Okay, so Yeah, Nikola is breaking like the level where the SPAC came on the public market. And so that puts all the early investors at risk. And I think this one is capable of really, really dumping if it decides to go down. And so if you just flip through a bunch of these kind of smaller EVs, like you can see the high risk stocks are all in pretty big trouble here. Let's go check out like other meme stuff like GME. GME has completely blown the bull flag. Like it was a good looking bull flag. It tested the crap out of the support level that I had there. It's broken down. So this was, I really like this bull flag, maybe 70% to the upside if it held. It's blown that bull flag. So now it's ugly, it's scary. Good luck with that one. I'm not going to touch that thing. AMC, it was testing support. It is still kind of testing support, but you can see it's like broken down even off the bear channel that I had for it. So a ton of the different categories of meme stocks are all eating it right now. They're all eating it. So I think that we're going to get a rotation out of this kind of stuff. And what are we going to rotate into? Well, oil is like a generic commodity. That's, who knows what oil is doing. This is some wild choppy stuff. Everyone says oil is going to just bull, but yeah, I don't know. This structure is sketchy. FCX is copper miners, and this one is actually holding a bullish setup while everything is crashing. This one is good. I like this. This is one of my favorite stocks right now. And I want to see what this does during this pullback and try to find where the market is going to start picking back up, because I think FCX might be a killer commodity trade. If we roll out of high risk and we roll into like miners, minerals, commodity kind of things. FCX looks cool. Uranium, testing and breaking. Okay, this one is scary right now. This is Uranium Royalty Corp, not like spot uranium or something. But this one is just, it's just a little hot above where I think the bullish kind of area is. So this one might pull into support and be a good trade. We'll watch that one, but it's not holding right now. Almost nothing is. It's like gold, silver, and copper are kind of holding, and that's it so far. Let's go like Tilray. Like, how are these? This is like another category of meme stocks. Breaking down. Sundials like baby Tilray. Breaking through the whole bull structure is getting broken. SENS, Senseonics. This is one of the only bull flags. And it's holding, sort of. This, if it holds, I think is going to be the only sort of meme stock-ish bull flag left out of any chart. And it looks like it might be trying to hold. It's trying to break down, but Senseonics, if it holds, and if I can find like the spot to rotate back long on stuff like this, may be one of the most awesome kind of bullish meme trades, and it's in, you know, like health but not COVID. It's a diabetes monitoring company, but it has a killer bullish structure where it just like threw a really good technical bull flag on a very strong channel here, and it's holding while everything is crashing. Keep an eye on that. That might be a fireball stock soon. And that's probably kind of covering all the things. I think we're doing a rotation out of super high risk, dangerous junk stocks and into commodities, minor, mineral kind of things like that. And it doesn't. This doesn't need to be like a massive like crash where everything sells off, but I think we're just gonna pull back a little bit on the NASDAQ. It looks like, and the risky stuff is really gonna crash out right now. And then I don't think we're done with the bull market, but it's different stuff that's probably going to go to the top, and it's not going to be these meme stocks. But Tesla is going to be an interesting one to watch for sure. That has not come down yet, although it is trapped under resistance. I think it was Tesla and FCX and like Senseonics are probably the three most interesting charts that I saw flipping through stuff here. But I do think that we are just starting a pullback. Like, I think it's going to get real. the next like couple of weeks. So heads up, happy trading, not investment advice as usual. Good luck on this. This stuff's getting crazy.